Hey everyone, welcome back to Corporate Decoder, the place where we dissect the confusing world of business filings. Maybe we can make a little sense of it all. Today we're going to dive into a filing from Thumzup Media Corporation, and it looks like they might be doing a little housekeeping with their stock. So this is a current report filed with the Securities and Exchange Commission, or SEC. Think of it as a company telling us about important things that have happened that aren't usually part of their regular quarterly or annual reports. This one specifically comes out on September 11, 2025. The company we are looking at is Thumzup Media Corporation, and it's incorporated in Nevada. Most of what we see here is about some changes to their stock structure. First up, it's confirmed the company is an emerging growth company. This means they can follow some special rules that are a little less strict than for bigger, more established companies. One of those perks can be delaying the adoption of new accounting standards, which can give them more time to get those systems in place. They have indicated they have chosen not to use that extended transition period though. So they are keeping up with the latest accounting rules. The main event in this report is something called a withdrawal of designation of Series C convertible preferred stock. Now that sounds complicated, but let's break it down. Companies can create different classes of stock, each with different rights and privileges. Series C convertible preferred stock is basically a special type of stock that can be converted into regular common stock, and it has certain specific rights. What Thumzup Media Corporation did is they filed paperwork with the state of Nevada to officially cancel this special designation for their Series C as preferred stock. The big deal here is that at the time they did this, there were no shares of this Series preferred stock actually issued or outstanding, meaning no one held any of it. So it's like taking a special type of ticket off the menu when no one was ordering it anyway. This effectively removes all the specific rules and features tied to that particular class of stock from the company's charter. Beyond the stock structure changes, Thumzup Media also put out a corporate overview presentation and a transcript of a video script on September 11, 2025. These are basically internal communications that they're sharing publicly. Companies often do this to give investors a better look at their business, their strategy, and what they're trying to achieve. While we don't have the content of that presentation or video script here, these types of documents can offer valuable insights into how management sees the company's performance and future prospects. They might highlight recent achievements, upcoming projects, or market opportunities. It's always a good idea to look at these accompanying materials if you want to get a fuller picture of what a company is trying to communicate to its stakeholders. And as always, these filings have to be signed off by company leadership. In this case, it's signed by Robert Steele, the Chief Executive Officer, on September 12, 2025. Now, looking at Thumzup Media Corporation, without the specific details of their presentations, we have to infer a lot. The withdrawal of a preferred stock designation when no shares are outstanding signals a move to simplify the company's capital structure. This generally is a positive step because it reduces complexity and potential confusion for investors. It means management is focused on streamlining their corporate governance. However, the fact that they're presenting this alongside a corporate overview and video script suggests they are in a phase of actively communicating their story to the market. As an emerging growth company, they are likely focused on growth and perhaps seeking new funding or partnerships. The simplicity achieved by removing the unused preferred stock class is good, but the real story will be in the content of those presentations they released. Are they highlighting significant revenue growth, new product development, or expansion into new markets? Without those details, it's hard to judge the overall health and direction of the company. When a company is an emerging growth company, it's crucial to watch their cash flow and burn rate. These companies usually spend more than they earn as they invest in growth. So understanding their financial runway is key. While this specific 8K filing doesn't delve into financial tables, a company's continuous efforts to communicate its vision and simplify its structure are often precursors to significant developments. We'll need to keep an eye on future filings to see if these efforts translate into tangible business results and financial improvements. Alright, that's a quick look at this Thumzup Media Corporation filing. What's your take on this stock simplification, and what do you think those presentations might reveal? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more of our corporate decoding. And don't forget to join our Discord community for more in-depth discussions. The link is in the description. Thanks for watching, and we'll see you in the next one.